Good afternoon. I would like to welcome you to this Cannabis Tax Compliance webinar hosted by the City of Los Angeles Department of Cannabis Regulation. My name is Dale Sky Jones, and I am the Executive Chancellor of Oaksterdam University, the original and longest running training institution for the cannabis industry. I'm excited to be your moderator today. We are here because the Department of Cannabis Regulation has provided the Business, Licensing, and Compliance Assistance, or BLC program, to assist equity entrepreneurs in the City of Los Angeles with obtaining and maintaining commercial cannabis license and operating a successful cannabis business. I want to encourage you to be interactive in chat and ask your questions. We will take pauses throughout the program to answer them. So please keep it focused on the subject today. This is a public forum, so we want to ensure that you don't put any personal information. And finally, please note that today's content was not created by the Department of Cannabis Regulation or the City of Los Angeles and is for informational purposes only. The information is subject to change and does not replace or supersede the Los Angeles Municipal Code nor constitute legal advice. If you have specific questions outside of today's topics, please call 213-978-0738 during business hours, Monday through Thursday, 10 to 4 p.m. to speak with a DCR representative. Now, it is my esteemed pleasure to introduce today's subject matter expert, Patrick Finnegan, CPA. That's a certified public accountant, and Patrick has over 40 years of experience specializing in federal, state, and excise tax cases. He is a former state auditor, where he gained firsthand knowledge of how cannabis businesses are assessed and audited. He has been in private practice since 2018 and now counts many cannabis companies amongst his clients through his practice, Professional Tax Solutions. After being an auditor for the CDTFA, the California Tax and Fee Department, Patrick is uniquely qualified to help operators understand how to stay compliant, avoid costly mistakes, and survive an audit. His deep experience with CDTFA audits, tax disputes, and compliance strategies makes him an invaluable resource for businesses like yours looking to understand and properly manage your tax obligations. And you do have the opportunity, as I said, to ask questions throughout this webinar. We enjoy keeping it interactive. So please get your questions ready and help me welcome Patrick Finnegan.
Thank you for a nice introduction, Dale. I appreciate that so much. Happy to be with everybody from Los Angeles. It's nice to speak with you today and looking forward to this presentation.
So let's talk about what we are going to cover.
Today, what we're going to be discussing is tax calculation on cannabis. We're going to break down cannabis taxes, the types, the purposes, some of the impacts that we're seeing in cannabis. I'd also like to speak about some of the pitfalls and some of the audit concerns. The primary area of my business is doing audit representation for businesses, cannabis and other businesses as well, that are going through IRS, CDTFA, even local audits for counties and municipalities and so forth. I think it's important for me to describe some of the areas that the operators really need to be aware of. And unfortunately, cannabis has a whole lot of taxes applicable to them. So there are some areas that you really want to make sure that you're educated about so you're not falling into these audit risks. And that's something that certainly I'll be able to discuss today during this presentation.
All right, next slide.
Now, there are a myriad of taxes on cannabis, unfortunately, but it's the truth. Oftentimes there's local taxes, there is state sales and excise taxes. And then we also have obviously the Internal Revenue Service and the Franchise Tax Board taxes. So We have 5 or 6 layers of taxes on cannabis, and I know it's frustrating for people in the industry. Oftentimes, there's a belief that you're simply working to pay government taxes, but we can go through some of these areas and have discussions on how these taxes are really laid out. Now, one of the areas cannabis taxes does assist is there's a lot of programs that are run by the state and local that utilize cannabis excise taxes and local taxes. They might be after school programs, they might be drug oversight and enhancement and trying to get people off of drugs and all kinds of social programs that are being funded by cannabis taxes. So oftentimes, I know we hear that, hey, we need to reduce taxes, but you have to also remember there's people that are receiving those taxes that are dependent on them, and they might kind of say, hey, well, no, we need that level of taxation to run our programs. So it's always this tug and pull that goes both ways. So some of it taxes report or support research. Social equity certainly is provided monies, education, and even law enforcement. So those are where cannabis taxes do come in. Now, these are some of the cannabis types of taxations that I alluded to. Certainly, the state excise tax is going to be number one on there at 15%. It's a substantial amount of tax, and it's on gross receipts. Again, only on cannabis products. So if you sell T-shirts or bongs or lighters and so forth in your business, you're not going to have the state excise tax on that. So be careful and make sure that you understand that concept. We also have local cannabis business taxes. In the city of Los Angeles, the tax rate is $10 per thousand. So obviously, or per hundred, excuse me. So it's a 10% tax rate on retail sales of cannabis. Um, Sales tax, California state tax, it has various rates based on where you're located. So you're wanting to make sure that your point of sale software system is actually calculating the correct sales tax by location. So if you're a cannabis delivery company and you're making sales into, let's say, West Covina, and West Covina has a sales tax rate different than Los Angeles, if it does, I'm not obviously just picked out West Covina, but you want to make sure that your point of sale does accurately calculate taxes. Certainly, there's a lot of great point of sale systems. That is something, though, it behooves you to make sure that that is being done accurately. Um, Municipal taxes would be a countywide tax, and cultivation tax, fortunately, was repealed in 2022 in July, but that was based on the sale of flour and so forth, and it was a pretty substantial tax. Again, after that was repealed in 2022, there was a discussion with the legislature that we had to be revenue neutral in that. So what that just really generated is they're also looking for taxes, and in that way, the state excise tax, there's discussion that certainly it's going to go from 15 to 19%. I think a lot of that is based on the repeal of that cultivation tax. So there's monies that do need to be brought back. So here is a slide that talks about taxation and how and we talked about earlier the substantial amount of taxes that are in cannabis, and I think this slide shows it pretty readily. When we talk about stacked taxes, what that means is that taxes become part of gross receipts. And this is a slide that that speaks specifically about the LA area, and it's after January of 2025. It's not prior. So first we start off with cannabis, and cannabis is taxed net of discounts. So let's say you have $100 of sale, but you give your purchaser 10% off. The tax will be on the $90. Okay, so make sure you understand that concept. And And really, the point of sale systems are doing that very well. You're not seeing too many errors on that, but be aware of that. So here's an example that I'll use. We have $100 worth of cannabis. Maybe somebody came in, bought a couple eights and $50 each, and now we got $100, and that's after discounts. So the first tax that we'll see is the local tax, and that will be the city of Los Angeles. So the $100 is taxed at 10%. So now we add $10 to that. So now we are at a gross receipts basis of $110. The California excise tax is then applied on that $110 at a 15% tax rate. So now we have the 110 times 15%. So that, let's say that's what, $16.50. I'm not looking at a calculator, but that becomes stacked. And then upon all that, we've got the cannabis less discounts plus the local tax plus the excise tax. That gives us then the gross receipts that's subject to sales tax. In Los Angeles, it's 9.5%. So you see that we have 10, 15, 9.5. Again, they're stacked, but we're showing that total taxes there is 34.5. And I would argue once we stack it, it's even at a higher percentage. So that is why our customers, or anybody that's running a cannabis business, they hear it all the time. My gosh, how much taxes are we paying on that? This is an indication of where we are on taxes for cannabis.
And I heard you say how important it is, and I just want to underline making sure that your POS system, which may have come to you preset at a certain rate, and you need to make sure that those rates are reporting correctly, because if there's an error in that first tax, that will affect everything on top of it if you wind up in an audit. Is that correct, Patrick?
Yeah, there's little forgiveness in having an incorrect tax rate. And on delivery, it's where the title transfers, and generally in cannabis, title transfers at delivery point. So that is why it's so critical to know what your local taxes are. Um, Certainly, if you are delivering a lot into a specific area, you're going to want to make sure that your point of sale does have that. And and it's a really thin line too. I mean, you can go maybe a couple blocks and your tax changes. So that's why you really are relying upon a good point of sale system.
And knowing where you're delivering to if it's a delivery service.
Yeah, and your metric should be able to cover most of that too. I mean, that's part and parcel of your software. But yes, you are ultimately always responsible for your taxation. You might have relied upon somebody to set up your system to to program your taxes. I've seen that before where the person programming it didn't fully understand how the taxes should be done. And then two years later, you got a massive tax bill because your taxes aren't set up. So
So the
yes.
easiest way to check this, would it be looking at a receipt?
Yeah, it really would be. I think that's the best way is take a look at the receipt to the customer and then recalculate the tax on a calculator and say, hey, am I off or is this correct? Did the local tax get charged correctly? Did the excise go on top of that? And ultimately, did the sales tax get applied for all of that? So, and be aware of what the tax rates are too. That's critical. And on July 1st, I believe the tax rate for excise tax is proposed to go up to 19%. If that happens, you definitely need to be aware and have all your point of sales correct and pass that along to your consumer, because if you do not, you are always liable for that. It is not a fair system, and it's brutally hurtful if you're messing it up, because the tax board is being very aggressive lately in making sure that these taxes are being remitted. And we'll talk about some of the things that they've been doing in some of the subsequent slides.
Indeed. And for the messages in chat, this is your opportunity to get involved and have your voice heard. So please contact your elected representatives about this issue.
Yeah. Yeah, no, this is LA specific taxes, and in Los Angeles, business taxes applied to gross receipts, and gross receipts for tax purposes means all the cannabis, less discounts, but it also has delivery charges. And one of the areas that you need to be careful too is if you're, at least for state taxes, I know if you have a credit card assessment, so if somebody utilizes a credit card and you're billing them, that becomes gross receipts subject to tax as well. Now, I wrote in this slide, it applies to gross receipts and may be subject to allocation. Now, this is a little, this is more of a complicated issue, but if you are a delivery company, you're operating in Los Angeles, and you are delivering outside of Los Angeles into another jurisdiction, your taxes are not necessarily that 10%. They're subject to allocation. Los Angeles has a rule called City Clerk Ruling Number 14. I challenge you to take a look at that. It's imperative if you are delivering outside of the city, but it allows for a lessening of the taxes based on those deliveries outside. Los Angeles isn't taking the whole piece of that pie. There's allocation, but it can be very confusing. So work with the professional if you don't understand it, and then seek advice if you need further clarification. I would make that a point. The other area we're discussing is county cannabis taxes, and that's Measure C, separate from the city tax, but you might be delivering where you have coming up certainly allocations to a county, and you need to be aware of or any city taxes that might rear their head. You have to be compliant. And then for new in 2025, there was a state law, Assembly Bill 1059. I thought maybe it was Senate bill, but it talks about that local jurisdictions can no longer include California excise taxes into the gross receipts. This was specifically what was happening in Los Angeles, as the audience might be aware, that it first became cannabis less discounts, and then they'd apply, then Los Angeles was indicating the California excise tax is part of the gross receipts subject to city tax. So you'd have cannabis, less discounts, then you'd multiply the 15%, and then you had the 10% local tax, City of Los Angeles. That was the calculation. Where that became difficult for a lot of operators is it was in conflict with the state. The state always held that it was cannabis, and then any local tax, and then that local tax was upon excise tax calculation. So you'd have, it's a circular logic. You cannot write a point of sale code when you have two things that are being taxed differently. There has to be some consistency. So the area that I recommended to Los Angeles providers is you simply take the cannabis less discounts, and instead of charging 10% to that, you're gonna abide by what the state policy was. You had to add another 1.5%. So let's say you charged on $100 transaction, you charged $10, and you're Los Angeles 10%. You would have to remit to the city of Los Angeles actually $11.50, and the calculation is the 10% times the 15%. So it added another 1.5% to the calculation. That way you could ensure that you were properly remitting the city of Los Angeles. That was pre-January of 25. Subsequent to that period now, Los Angeles city taxes is upon cannabis less excise. Or less, cannabis less discounts, and then that becomes the gross receipt. But don't forget, delivery charges are part of gross receipts as well as any credit card charges. And if you have any questions on what constitutes gross receipts, certainly we're here to help, and we can clarify that.
Yeah, you have actually collected, we've got, I love it, some lively questions here that I'd like to pause and start asking you, Patrick. First, Nona would like to know where the medical marijuana taxes factor in with the stack taxes. So if you are serving a medical patient, where does that factor in?
Yeah. Well, good question. Actually, a great question. So the medical cannabis is exempt from state sales tax. Okay. And I'm not gonna, I mean, as far as what is medical for the city of Los Angeles, I'm not privy to that. I'm not aware if they exempt that as well. I certainly can check on that. But in order to be able to be exempt from sales tax on cannabis sales, you have to have a local jurisdiction. Usually the county provide a 9-digit marijuana cannabis um, code or number. And so when you're in under an audit and the state of California is looking at your claimed exempt sales, excuse me, for cannabis taxes, they're going to look to see that you have on file that 9-digit code. And what I've seen in a lot of audits is people that have been customers at a dispensary for a long time, under 215, they had an exemption for tax for that. That is no longer valid. And what you will find is the state of California will hold you responsible for those unbilled taxes. If you're still exempting people under the 215, it has to be a county authorized and it has to be a 9-digit code. So make sure you've got that. And honestly, people have to pay money for those. So I think the cost is somewhere around $100. So it costs money for the consumer to get into that field.
At
So
least you have, yeah, you have to have the doctor's appointment too. So, next question, we have the anonymous attendee asking, in Q&A, which I'd like to point out to everyone, there's also a Q&A button down at the bottom. Why is there double taxation? Taxing sales tax on excise tax doesn't make sense.
doesn't, but it happens on so many things that you're probably unaware of. I was working for the state tax board, and my specialties were cigarette and tobacco, as well as alcohol beverages, and gasoline is another one. Um, all of those sales taxes are applied to the excise tax. For alcohol beverages, the tax is 20 cents a gallon. For beer and wine, $3 and 60 or 50 cents per gallon for distilled spirits. Those are also subject to sales tax, but what you're not seeing is those separately stated in any invoices. Cannabis requirements does say that the excise taxes are separately stated. Yeah, it is a huge amount of tax. And what I'll give you a little, kind of background on when I started with the tax board. I started in oh my gosh, let's say it was 1989, or it's been quite a few years, but my first promotion was to the excise taxes division, and that was in 1991. And the reason I got promoted is because there was a new program and there was an increase in alcohol taxes. So it went from 4 cents a gallon to 20 cents a gallon for beer. The interesting part of that is that was in 1991 in July. The alcohol beverage taxes has not been raised since that time period. So it's well over 33 years in alcohol. It remains the same taxes. And really the unfortunate part is you look at what cannabis has, and the cannabis taxes are explosive. They're huge. They're difficult. They're bankrupting people, and it's difficult for businesses. Again, I ran a cannabis company. It felt like I was only in business to pay the excise taxes to the state of California, and I feel your pain. But taxes on taxes happens more than anybody realizes. It's not that uncommon.
Fortunately, yes.
Yeah.
And G had a couple of questions, or at least one. Is the county cannabis tax measure C a new tax?
I believe so. Again, I'm a Northern California boy. I mean, most of my clients are in here, and I have a few in the Los Angeles area. But I'll do some more research. My understanding is it was set to approve for counties to also add taxes. So if that
November,
does come into play, that just increases taxes even more.
November 2022, I used the Google machine. Voters approved
Okay.
Measure C to allow the county to tax cannabis businesses that are in the unincorporated areas of LA County. So it seems as though this is for only unincorporated, not for city. So you also, when I mentioned earlier using your receipt for a customer, I would strongly recommend you take that receipt to your CPA and have this conversation. We're hopeful that we're not just panicking you, that we are bringing forth those things that you can correct now to avoid future fines and penalties.
Yeah. Yeah. And there's times I've put out there, hey, send me a receipt. I'll take a look at it. I won't charge you. And honestly, I've gotten less than a handful of those where I've actually said to people, just take a picture of a receipt, send it over to me. So if I offer, I'm serious about it. I will take a look at stuff to help you guys out. I do not want, 3 years down the road, having you have I've had clients that have $400,000 issues because of incorrect taxing. So do not get there.
So I'm going to ask one more question because it's specific to POS systems, and then I'll hold some of the, if there's future ones for the next break, because you might be getting to it. If you include, G is asking, if you included the excise tax in your price in 2020, as recommended by the CDTFA's website tax guide, does the POS system have to itemize the excise tax in the back end, or can we just state that it is included in the price? Would the CDTFA allow this?
My understanding is part of the change in January 23 was to make that excise tax a separately stated item. So the customer has to see it. Um, I will confirm that, Dale, but I have noticed that those are separately stated now, and there is no inclusion. And I think part of that is the consumer really does need to see, and it might be helpful to the dispensary too, to say, hey, this isn't me. I'm not just billing you so much money for it, but this is a required tax that the state of California is assessing on the consumption of cannabis. I'm just passing it along. It's not, you're not getting the $75 eighth from me. You're getting a 50, and then the state of California is dropping all this other taxes on it. So,
Great
uh,
questions. Thank you. Yeah.
yeah, impressive. I mean, I know everybody feels the taxes. I do too. It is something that I don't know if it's sustainable, but having a black market out there also with competition from people that are not subject to these taxes just makes it harder for everybody.
So just a brief follow-up then on Patrick, if it wasn't a requirement in 2020, if this individual is audited, it's okay for that time period, but once they start requiring it, that's where like start today, moving forward, itemizing it, but they won't necessarily be in trouble for having done it that way previously if it was allowed previously, correct?
Yeah, here's the other thing that changed, though, also, Dale, is that prior to January 23, you had to identify that excise tax is included in the retail sale price of the cannabis, right? So you have to note it. The other thing, too, is the excise taxes is what you were receiving and what you had remitted to the distributors at that point. So prior to January of 23, you were buying your cannabis from your distributor, and that distributor was remitting it. Well, hopefully they were remitting it, but that's the reason why it's now at the dispensary level. If the dispensary screws up, they've got a license and they have a lot of money invested in their retail versus having perhaps a distributor that goes out of business and doesn't have any real ties to retail location. I think that was the mentality of the state moving over to the retailer and having the excise taxes at the end instead of, at a purchase. It's kind of my editorial opinion, but I think that's the reasoning behind it.
So you believe in an audit, the CDTFA would be okay with it if it's not itemized by the POS in 2020?
Yeah, it would be include, but again, the CDTFA is not auditing any periods that far back. There's a 3-year statutory period if you filed your tax returns. So let's see, we're in 25. You're going to have 22, 23, and 24 subject to taxes at this point. We'll probably drop off the first quarter of 22 here shortly. So just be aware too. And if, again, I mean, my primary job is representation. So if you had any questions on maybe an audit that might be coming up. Certainly, I can answer some questions through you, Dale, or however we want to kind of reach back out to the city of Los Angeles. But yeah, remember your statutory periods as well.
Right. I want to make sure we can keep this moving, and I'm going to hold the other questions until we get to the next pause point. Go ahead,
Yeah,
Patrick.
I'm sure we'll get through, and they're great questions. My gosh, yeah, appreciate that. Now, this is tax calculation and receipt accuracy, so let's dive into that one. All right, so this is what I was talking about, the stack of cannabis taxes. And again, making sure that your point of sale is doing this correctly. You're going to calculate the local cannabis business tax first, and that it will be the city of Los Angeles for the group that we're talking with. And remember too that understand what your gross receipts are. Do not shortchange the city. If you do apply a delivery fee or a credit card, or there's, excuse me, some other charges in your receipt to your customer, those are gross receipts. And also remember those items that aren't subject to cannabis taxes. I mean, hats, shirts, bongs, papers, lighters. I know that's a small area, but don't pay taxes on stuff you don't need to, right? So I think everybody understands that, and your point of sale system should be able to note that as well. And then after we get to the local tax, the state comes in and applies a 15% excise tax to that subtotal. And upon that subtotal, then now we have the sales tax. And for LA, it's 9.5%. And incorrect tax stacking leads to CDTFA audits. And let me kind of explain that. I'm also saying that the CDTFA will reach out to customers, dispensaries, and delivery companies, and they'll have a question for you. And it often starts as an innocuous question saying, we're reconciling your metric to your tax returns, and we want you to provide your sales summary reports for these periods to us. I'm having a case right now, exactly that. And it's an easy way for the state to audit without auditing. They're really saying, I want to see your accounting records. And frankly, you have to provide those. They have the right at any time to ask you for your accounting records to determine it. And if you don't, they're going to issue a billing. So also understand that it's not just like a formal audit where they're saying, hey, on December 14th, we're going to be at your location, have these records. It's oftentimes even more than that. So I will also tell you that localities will contract with companies, and one in particular is known as HDL, and certainly it is. I'm seeing it more up in Northern California, where they take the audit function on behalf of the city, and they'll say, "Hey, we want to audit your accounting records." So it's not just the state that's doing this. Cities and localities can also audit, and City of Los Angeles has a finance and audit group, and they're coming out and looking at cannabis businesses to confirm the correct amount of taxes that are being billed. It is a real issue. So this is an example of how the taxes are stacked. And so we start with, and it really does show the point. It starts with the selling price of cannabis at a $35, let's call it an eighth. It's being delivered. We got a $5 delivery fee. And now we have the City of Los Angeles tax being calculated at 10% of the $40 that we see. So now that becomes a $44, and that's subject to the state excise tax at 15%. That's the $6.60. We stack that, and now that the sales tax comes upon that. So that $35 rose by $20.40. Yeah. I don't think this is anything nobody's seen. I mean, everybody knows that this is where weed is. This is the expense.
So how, G is asking in the questions, how do we tax the non-cannabis items sold like lighters and t-shirts? If we do not have a City of LA LGR-2, the BTRC for retail sales, if we are simply, let's see, if we simply have an L711 or L712, what is the city tax rate for non-cannabis items sold? And are non-cannabis sales city taxable? Thank you.
Yeah, and
Or a few.
the tax will be subject to sales tax. Those are, unless there's a specific exemption, you are going to be hit those shirts, t-shirts, so forth. My understanding is LA also has a 1% tax for non-cannabis items, but I'll clarify that and make sure that that's the case. So for those non-cannabis items, instead of the 10%, I believe there's a local tax as well, but it's not 10%. But again, give me an opportunity. I'll clarify that and present it. And G also have G. I mean, we'll clarify that and make sure that she's or he or she is aware of that nature. So these are kind of areas of calculation errors that I'm seeing when I'm doing my representation work. Applying sales tax before excise tax is one. Uh, Making sure that your point of sale is correct. Um, that's the misconfiguration, and that's a real one. Failing to collect or remit 15% of the state excise tax properly. So if there's some cannabis that you're not applying that to, that'll be an area. Misclassifying taxable versus non-taxable items. So the state, if you're charging taxes on excise tax on t-shirts and non-cannabis items, you have to either refund that to the customer, or because you collected that tax as being excise tax, the state of California will look to that as due by you to the state. So if you're misclassifying items, you're still responsible for that tax. So they call it a debt owed to the state. You cannot enrich yourself upon taxation. So again, you have to remit to the state. And the other thing is that I see, and I think I made it really clear, is relying solely on software without verifying accuracy. The people that set up these tax items, they're the software company. They're not necessarily the taxing agency. You would hope that they would understand it so that they're not creating issues for their customers. But they will also tell you that that is your responsibility, is to be aware of your taxation. So that's their out, is they're not going to be held liable for something that really was your responsibility as a business owner. Um, so that's why it's really important. Can't stress that enough. Um, there is point of sale systems. They do automate tax collections. Errors are common, but on some of the better ones, they're not that common. Um, Incorrect settings are really the issue. And again, you have to verify that your point of sales are correct in the way they calculate. Um, you want to make sure you have a good working relationship with your point of sale system provider. There's many of them out there, and many of them are very talented, and they do a great job with the taxation portion. But make sure that you're always compliant. So if you know of something that's happening in your area, you're going to contact your point of sale and say, "Hey, Jill or Carl or whoever you're working with, is this reflected in your software?" And they'll let you know that yes, we've corrected this, or we've included this in our newest calculation. And internal audits are always a good thing. I'll tell you the reason also why internal audits are a great thing in cannabis is that people enjoy cannabis, and it's easy to smuggle, and it's easy to take out of especially, and I'm not saying your workers are dishonest, certainly, but an internal audit lets you know if you've got problems like inventory is missing, things are getting stale. that need to be taken care of. And I think the law also talks about a 30-day requirement for inventory and checking your inventory. So always good to know that what you have on the shelf is actually matching your system and making sure that things aren't disappearing. Cannabis is expensive, it's easily hidden, and it's just, I hate to talk about it. I hate the thought of having somebody being concerned about their employees, but um, it's it's just common sense. Just make sure that you know what you have. So the separately stated portion of the tax bill really does help the consumer know what they're paying for. There's clear breakdowns that show what the taxes are, and it does prevent your customers from accusing you of kind of um, gouging them for your products. And in that slide that we showed a couple back that showed that a 35 became a 54, your customers do need to see that and understand that. Um, Also, customers are not stupid too. If they're seeing that you're charging them the incorrect rate, they might complain, and oftentimes they might complain to the taxing agency. And now you got somebody looking at your pricing and so forth. Um, and it's again, you're in business to make sure that you're charging correctly, your customers are getting value, and as best you can, you want to make sure that your system doesn't have errors. And again, the last item is overcollection of taxes. I'll give you an example. You've incorrectly charged the excise tax. Well, unless you give that back to each and every customer, the state tells you that that's a debt owed to the state. They're not going to let you say, "Oh, you're bad. I overcollected by $30,000. I'm going to keep the 30,000." No, the state's going to say, if we don't see that you give that money back, that becomes a debt, and that's a real thing too. Yeah.
Brought up a moment ago with taxes, and I know that it's a tremendous pain point competing with those in the illicit market who are not paying for permits
Yeah.
and taxes and fees and all of this. And when a customer walks in and sees that sticker shock, but I feel if you also illustrate to your customers not just the taxes are too dang high, but where those taxes are going in a way that they see what's in it for them to want to continue to shop legal and permitted dispensaries such as yours or contact delivery services such as yours instead of the illicit businesses. Show them what's in it for them, maybe have a little chart of where the money goes in the community to help parks and services and security and police to keep us secure as we walk in and out. Because oftentimes when we remind people where that money goes, they're actually willing not only to pay it, but to talk about why they pay it, because they are trying to support local legal business and their community at the same time. Just a
They
suggestion.
don't want to smoke weed that's got pesticides and other items within it. Legal cannabis is tested. Uh, and certainly if you're smoking something, you don't want to inhale something that's going to be really toxic to your system. But yeah, it's a great argument that legal cannabis is the right way to go and definitely needs to be encouraged. That being said, too, there's responsibilities on government to make the retailer successful. Now, when the government's collecting taxes on you, government should be a partner in your business. It doesn't work. It just isn't a one-way street. The government needs to go after the people that are selling illegally, go after those pop-up dispensaries that are everywhere and say no, and hold the landlord responsible for those pop-ups because they're enriching themselves on illegal cannabis. I mean, it's got to be more than just the individual. And San Diego did a great job of getting rid of that by holding people responsible that are actually the landlords. And um, I'm not saying that this is a solution for everything, but as government takes in money from uh, legal businesses, they do need to support those legal businesses as well. And I worked for the government for 30 years. I understand that government has a responsibility to people as well and to the businesses. It makes sense. If business is doing well, government's doing well.
Indeed. Quick question. If you run a delivery company, and this is two different questions, so I'm going to break it in half. If you run a delivery company, do you have to pay city taxes to each individual city you deliver to? Is part one.
Well, in the sales tax, cities are also allocated the percentage, so that would be a yes. Let's say West Covina has a local tax, you're remitting it by when you pay your taxes to the state of California. West Covina will get their cut. And that's being done in the point of sale system, yes.
And so will LA, by the
Yes,
way.
they
So
will.
it's
Yes,
it's
they
not
will.
one or the other. It's often both. The second part of the question is, if you run a delivery company, do you have to obtain a city business license in each city you deliver to?
I suspect you will. Um, uh, Again, I'm not as knowledgeable
The
in Los
tax
Angeles
city.
as I am in the Bay Area, but that's generally the way of doing that. And the way to take care of that, Dale, is to have the owner contact the city and say, "Hey, I'm finding that I'm doing more deliveries in, let's say, West Covina, since I know the name of the town. What are my responsibilities as a delivery? Because you don't want to get pulled over by the police and saying, "Hey, what are you doing delivering into West Covina if you don't have a license in West Covina?" That is a that is a risk. So do a little diligence. Talk with your point of sale provider. Again, they'll know what the requirements are to operate in that location, and there's certainly, and educate yourself. There's so many cities, though. I tried to think, all right, before this discussion, how do I go about being able to discuss this? But Los Angeles is a city with thousands of small little towns and locations. It would be a lot of work to understand all that, but the sales tax portion is done within the point of sale system. So if there is an addition to that, those small towns will be paid for by your work and your deliveries. You're going to get it from your customer. It's a pass through from the customer, but the responsibility is to remit to those locals. Good questions. Avoiding tax pitfalls, audits, compliance, and risk management. And this is pretty much where I come in. Audits, like I talked about earlier, how CDTFA is going about requesting to small businesses to confirm that there are any miscalculations, and they'll ask for a small sample, basically kicking the tires. If they kick those tires and there's errors in your issue, you're going to be audited for the whole 3-year period, unfortunately. So let me go back on that comment. This is the way that the tax board is utilizing their workers as efficiently as possible. They'll find a little error, and if it's little, they might say, well, you need to correct this, and here's a billing on that. But if it's something that they say, well, that doesn't look right or doesn't meet the smell test, they'll assign the audit. Next thing you know, you'll get that 3-year statutory period of now you have a excise and sales tax. Remember, it's the same agency, so you might have two audits, two separate tax programs. When you combine those, that's 15 and 9.5. You got an exposure of 24.5% of every dollar that you sold. So that's why this is important. Um, they do focus on tax errors, sales tax miscalculation, gross receipts reporting. Those are the areas. They they specialize also, or they look as deductions too. So if you're a medical cannabis company and you've reported $100,000 in exempt transactions, they're going to test a period to make sure that the people that are actually qualified for those sales tax exemptions do have the proper documentation. And like I said, if you have a document that's from 215, those are automatically disallowed. You better have the 9-digit document that is applicable and allowable for the state taxes. And then businesses, many businesses are unaware of tax compliance issues until they are audited. So that's the old adage, if you don't know until you know. And that's why I think a lot of this still is we're trying to kind of push our retailers and our delivery companies and our cannabis businesses to educate yourself, to don't be the victim of this, because really cannabis tax is, if you can survive the tax portion, you're going to do okay in business. I think you're going to do a lot better than most. We're seeing substantial liabilities that businesses have with the California Department of Tax and Fee, primarily on excise taxes, because if you understate that tax, you're subject to 50% penalties. And I'll let that sink in. If you owed $100,000 and you didn't pay it on the day that it was due, that 100,000 now is 150,000. It's killing people. Tax is going to go, let's say it does go up from 15 to 19, that just exasperates the issue. And I know cash flow is difficult, and you got this pot of money in excise taxes or sales taxes that you've put away. Put it away. Do not touch it, because there are issues with that, and I think we talk about that on personal liabilities that might be upcoming. But that's really an issue. I do not want any of you to have to go to sleep at night worrying about the tax board coming after you on a personal level and maybe leaning properties or anything bad, so bank accounts and so forth. So fix it before you know it's a problem. And what triggers an audit? And there's no rhyme or reason at times. Sometimes it might just be that the tax board is looking at businesses in the area and who has been audited and who hasn't been audited. It might be something that simple. It could also be fluctuations in transactions. So you went from $1.3 million one year, and now you're down to 500,000. There might be reasons for that, but that could be something that might trigger a requirement. If you have a whole lot of deductions, let's say medicinal marijuana, and it's a big part of your transactions, I want to take a look at that and see if it's valid. And then you have receipts that don't clearly itemize that the requirement. So you will notice one thing that tax board does, and I've seen it in every audit that I've represented, they'll ask for receipts for different periods. So let's say I'm being audited in March of 2025. The tax board will say, send me receipts for July, August, and September of 2024. And they'll want to calculate the taxes themselves. And they might even go back into further periods. But that is one thing, 100%, 100% I've seen them do. So, and large cash transactions without proper documentation, I think that's more of an IRS issue than anything. And probably it's let me touch on that, because IRS is a problem as well. I mean, it's 280E, and that's certainly a subject for another discussion. But there's also Form 8300, and it's real. If you are providing or paying somebody $10,000 or more in cash, that person has to provide you with the receipt, right? So, and it's Form 8300 that they have to file with the Internal Revenue Service, and they have to file that within 30 days of the transaction. So you'll see that from your distributors who are taking that money. They're going to give you and require you to fill out that Form 8300. If they're not, then you got some issues, because the penalties on that are substantial. I had a client that I think owed $115,000 for failure to do Form 8300. Here's the issue. They were reporting all their taxes. They were not trying to cheat anybody. They just simply did not take those forms, did not provide those when required. They're paying the price. Like I said to begin this discussion, there's so many ways that taxes can become problematic. Now, how to prepare for an audit, and this is really upon the retailer. Maintain complete and accurate financial records. So your QuickBooks accounts or whatever you use, make sure that when you're providing that to the CPA, that he or she is able to prepare your tax returns appropriately based on your information. Reconcile your point of sales, your bank deposits, and your tax returns. Make sure that cash isn't being misplaced or being stolen from you. Another good reason to reconcile your data, especially in a cash business as prevalent as cannabis is. Cash is, and I don't have to tell anybody that there's, somebody sees $1,000 laying around, it might tempt them to take it. So make sure you well know your accounting and retain all tax related documents for 7 years, but keep those records, but you're not always subject to taxation on there. There's generally 3-year statutory. Government tells you that they're going back, there better be a good reason. So get some representation to understand that. And then have documentation ready to support a payment plan request if you need to go there. And then here's where I kind of alluded to it earlier about personal tax liability. If you're the individual responsible for remitting and paying the taxes, you sign the returns, you have the bank account to do those returns, and you don't pay your taxes, the state of California now, after January of 2023, you can be personally liable for those taxes. Can you imagine, having a difficult business, you're going through that, and to understand that you can also have your bank accounts liened? I mean, how do you say that to your spouse and your family that I've endangered our financial well-being? That's why you have to really be smart about this stuff. If you're finding yourself indebted on tax issues, you need to think long and hard about what the consequences are. And to consult with the tax professional before responding to an audit notice. I'm not going to, say, hey, hire me. That is not what this discussion is going to be about. What it is about seeking advice. Put yourself in a great position so that you can survive these and thrive, and that your business continues on. Generally, if you get through an audit, they're not, and it's a zero or little change audit, the percentages of you having an audit in the near term are much lower. They move on because certainly there's a lot of other individuals that they can go after that are not that way. These audits have been very productive for the tax boards, and I hope to limit that in the future. These are some of the kind of smart things that we've talked about. Review your past tax filings before the CDTFA. And it's not just before the CDTFA, that also applies to Los Angeles. Making sure that the calculations that you did on city taxes were accurate, especially prior to January of 2025. And I say that because you had conflicting methodologies between the state and the city of Los Angeles in calculating tax. So city of Los Angeles has been assessing liability based on that. Using separate tax accounts for excise, sales, and payroll. I would say you could use singular excise and sales tax accounts. Obviously, it's expensive in the cannabis world to bank, so you don't want to have so many. But the concept here is put the money away. Do not commingle it with the daily funds, so you're not putting yourself in a position where you're threatening your business. And I get it. There's such a large dollar amount coming in for those taxes that it can smooth out cash flow issues, but be very, very careful on that. You know your deadlines, your tax deadlines. And I'll give you an example of that that's very easy. S corporations and partnership tax returns are due on March 15th. They're not due on April 15th. They're due on March. If you fail to file your tax returns for S corporations, the current penalty for that is $235 per month or portion of a month, even a day. So if you go 10 months, it's $235 per month per partner in that S corporation. So if you have 3 people, now you got $235. And if you do it for a year, because it can only go back a year, but you got $235 times 12 times 3 people. So now you're like over $5,700 for just 3 people tax liability. Understand those. Do not mess around with your tax filings. have a good representative, and certainly understand it yourself so that you're not putting yourself in a position. And finally, understand CDTFA payment plans if you owe back taxes. CDTFA wants you to pay your taxes, and they'll be helpful to you. They want to see those monies come back. After you've paid the taxes, we then will file a request for relief of penalty. Not always guaranteed, unfortunately, that they'll accept that, especially if you do it often. But if you're forward with this CDTFA, you pay your taxes, at least you have an opportunity to request the relief of penalties. And invest in professional tax guidance before problems arrive, and not necessarily hire somebody, but certainly educate yourself. Read everything you can about taxes. Look at the CDTFA tax guide. Look at the City of Los Angeles tax guides. They're there for a reason. They're there to help you. And there's good people working both at the CDTFA and the City of Los Angeles that want you to succeed. I absolutely believe that. I do not believe anybody wants companies to fail, because the city doesn't gain anything to having a business closed down. They need taxpayers now more than ever. So I know there's some cheerleading done by the cities, and funding and support. Some of these things that we're talking about now are because of that, and they're very welcomed. And so take advantage of it. What do you think, Dale?
I think
Think
I
that's
have
about?
just a couple of quick questions to wrap us up, especially if you are feeling your heart thumping. What steps should an operator take if they realize they've made a tax reporting mistake after submitting their returns to CDTFA? What do they do next if they are?
Well, they'll amend their returns. They'll make it right. They'll respond to the CDTFA and say, "Hey, I became self-aware of this issue." One thing I do know, that the CDTFA is very receptive if you're reporting it versus they find it in the audit. They'll say, "Hey, well, they stepped up, and we will, reduce that 50% penalty because the taxpayer was forward on that and recognized it." That's a smart play.
How
We're
long is?
also
Mhm. Go ahead.
Yeah, it's always a good idea. The other, we do want to point out too that it's not all bad on the tax front. If you're an equity individual and you've been granted the exemption from Bureau of Cannabis Control licensing fees as an equity, you qualify for 20% retention of excise taxes. So quick calculation, let's say you've charged your customers $100,000 over that quarter. You're remitting that to the state, but you're an equity candidate and you apply and qualify for this program. You get to keep $20,000, pure profit. It's very, very nice.
That's critical, and that is for last year and this year, if I'm not mistaken, and then it ends, or at least it's scheduled to end. All right, two more quick questions. How do you set up these different accounts for excise tax, sales tax, payroll tax? So many things.
You go to your bank and say, "Hey, I need to escrow some money, and I want an account that I put into it, so that every week or whenever you clear your accounts, you deposit that money." And at the end of, and I'd also say it's probably a good idea to put an interest-bearing account too. Look for a short-term CD. I
Make
do
money
not
on
work
the
for.
money while it's sitting there
Yes, you
waiting to
do,
pay the
especially
taxes.
if it's substantial money. Um, and then at the end of the quarter, I mean, you do get 30 days past the date of that's due. So let's say you have a first quarter, January through March 31st. You don't have to pay that liability until April. So you can float money for a little bit, and then you remit that and you're on to the next quarter.
Mhm.
So that would be my recommendation.
And how you avoid
Payroll
both
is
mixing, which is
Payroll is a little harder because people are getting paid every 2 weeks, so you're moving through that money fairly quickly.
mhm. And quick definition, just commingling is having monies for different purposes in the same account, and you never want to commingle your personal money with your business money, and you don't want to commingle your tax dollars with your income. Okay, last question. We're going to wrap. What specific red flags does CDTFA look for? How do you, maybe avoid an audit by not, being a giant target for them? How do they select cannabis businesses for audits?
I think I used to have to do this as a job, part of my job for a period. We look at companies that have fairly high dollar values too. I mean, if you're moving a lot of money through your cannabis account and you have a lot of reported sales, is a good thing because that means your business is doing well, but it also kind of puts you up because if you're looking at your resources and labor as a resource for governmental agencies, what does it make sense to do is it makes more sense to look at a company that's got $3 million in quarterly sales, or does it make sense to look for somebody at $40,000 a quarter? Your bang for your buck is going to be at the higher dollar at. And you get the more experienced auditors doing the larger businesses. But then there's also just the fact that CDTFA has a lot of people and they've recognized that cannabis is ripe for tax issues. There's a lot of problems. And so they're sending resources out that. So regardless of how well you're doing or you're doing everything right, you could very well be audited. There might not just be any way around it. So that's why I think all the discussions we said about get right before somebody comes to you, it's really critical. Make sure you're doing your business correct, your accounting's correct, your taxes are being remitted correctly, your point of sale is accurate. Um, you have all your exemptions for medical marijuana. You check on that, make sure that they're in your point of sale system. They're 9 digits. Those items I think are real important. And all the best to everybody. I know how, I hope I didn't frighten anybody on taxations, but it is a serious topic. And like I said, if you're doing it right, you can survive and you can thrive in this world. Um, and you also will know too, am I only working for providing taxes and what's the end game in my world? And that's a big part of it. So best of luck to everybody.
Indeed. And thank you so much for being on the side of helping operators navigate these important critical issues. So please, everyone, help me thank Mr. Patrick Finnegan of Cannabis Tax Solutions
No,
for
no
helping.
thanks. No thanks needed, but all the best to everybody. And love LA, a great city and great department that is spending resources and trying to make it easier for their licensees. And that's all we can ask for. So thank
Indeed.
you. We'll talk soon, guys. Thank you again.
And thanks to each and every one of you for your time and attention today and attending this amazing webinar, which was offered thanks to the City of Los Angeles Department of Cannabis Regulation. This webinar recording will be soon available on DCR's. You can go to cannabis.lacity.org on their website. You will need to log in, I believe, to the LMS to see it. And if you have any questions on accessing your LMS account, please email dcr.sep@lacity.org. Also, on Monday, March 17th, 2025, DCR did open its Social Equity Individual Applicant, SEIA, verification window. This window allows individuals to request review to become SEIAs, a designation that makes available training just like this and other amazing educational resources on building a cannabis business and opportunities to apply for certain cannabis business licenses. This verification window ends at 4:00 p.m. on April 1st, 2025. I will ask Mario to drop the link in chat real quick. And we are all grateful for your time and attention today. I'm Dale Sky Jones. Thank you so much for joining us. I hope you have a wonderful rest of your day and even better week. Thank you.